Good morning and good afternoon to those of you watching from Saudi Arabia, Turkey, Botswana, Sierra Leone, and of course all the stakeholders and partners of the African Finance Corporation who are tuning in from all over the world. My name is Fifi Peters and I'm happy to be joining you this year for the 4th AFC Country and Stakeholder Symposium. The theme of this year's symposium is Retaining African Capital for a Sustainable Future. Now, according to the latest World Investment Report by UNCTAD, foreign direct investment in Africa declined to $45 billion in 2022, and that is from a record $80 billion in the previous year. The patterns of that FDI flow were quite uneven, with some regions like North Africa and East Africa attracting higher FDI. But these certainly were not enough to offset the magnitude of outflows from other parts of the region, most notably Southern and Western Africa. So we know that this flight in FDI is a huge challenge for Africa because it amplifies an existing infrastructure finance gap that is crucial for Africa to truly rise. And we also know that the balance sheet of most African governments right now are not strong enough to offset the blow. So for the next hour and a half, we'll be hearing from various thought leaders, decision makers, and key stakeholders on how to prevent any further capital in Africa from taking flight. And also, perhaps more importantly, how to ensure that capital already on the continent from local companies, pension funds, personal savings, find its way to the root of the African soil and grows into a harvest of much needed jobs as well as opportunity. And I would like to hand over to our first speaker who will give us the official welcome address. You see him on your screen right now, Mr. Emeka Emu, who is the chairman of the board of directors at the African Finance Corporation.
Good morning, distinguished ladies and gentlemen. I'm Emeka Emu, and on behalf of the AFC Board of Directors, I welcome you to this 4th edition of the Country and Stakeholder Symposium. I would like to acknowledge the presence of the esteemed heads of government, honorable ministers, our valued guest speakers, heads of agencies, development partners, and our many important stakeholders and participants today. Welcome all of you. Your presence with us today is not just a formality, but it is a testament to the significance of this symposium and your crucial role in its success. For those attending for the first time, a little bit of history. This symposium was inaugurated during the COVID-19 pandemic to engage with our stakeholders and to support African governments during what was an unprecedented, challenging period. The symposium has since evolved into a vital platform for collaborative dialogue between governments, industry experts, investors, and other partners in the AFC community to meet our continent's developmental challenges with innovation, collaboration, and pragmatic solutions. Since the last symposium, we have made significant strides in our African footprint. Country membership has increased to 43 African states, which represents 80% of the continent. So 80% of the continent are members, as we welcome the republics of Burundi, Sao Tome and Principe, and Ethiopia into the AFC Alliance. Welcome to those countries. Our shareholder group has also expanded significantly with a corresponding increase in the member state support. Member countries, including the republics of Benin, Botswana, and Cameroon, have invested in AFC. Additionally, the government of Turkey, through the Export Credit Bank of Turkey, Turk Exim Bank, has become our first non-African shareholder. This exemplifies the increasing relevance of AFC as a partner to global strategic interests in Africa. During the challenging period, the corporation raised new capital from new and existing shareholders in excess of $500 million to extend our impact on the continent. Crucially, we continue to encourage African pension funds and financial institutions to partner with us and provide the much needed support of African capital to serve Africa's needs. Just in the past year, this has resulted in the National Social Security Fund, NSSF of Kenya, Caisse Nationale de Prévoyance Sociale, CNPS of Cameroon, and the State Bank of Mauritius, SBM Capital, joining our shareholder group. On the debt side, the corporation successfully raised more than $2.1 billion from a diversified range of lenders and financiers across the global markets. Key inflows came from 2 syndicated loans of $625 million and $750 million, as well as a 50 million euro loan facility agreement with Italy's Cassa Depositi e Prestiti SPA, and a $350 million long-term line of credit with the African Development Bank, AFDB, and a $400 million loan from the Exim Bank of China. These significant investments testify to the importance of building credible and strategic partnerships and showcase our members and partners' unwavering support and commitments. We are immensely proud as they demonstrate AFC's local impact and global reach. Amongst our robust pipeline of critical projects, we secured the developer role in the Lobito Corridor project, sponsored by the United States, European Union, Angolan, and Zambian governments. We also successfully realized a profitable exit from our investment in Takoradi, selling to Yieldport, one of the largest global port operators. AFC provided a highly crucial enhancement, leveraging off its A3 credit rating status to support the Arab Republic of Egypt, which is a member country, as a re-guarantor on a private placement offering of 75 billion yen in 5-year samurai bonds at an all-in price significantly below its benchmark borrowing costs, thus underlying the pragmatic impact the corporation facilitates for member countries. AFC's work has been recognized through successive awards, which we're proud of. These include DFI of the Year for Europe and Africa, Equity Deal of the Year from the African Banker Awards for Infinity and Lekela acquisition, Africa Champion Award at the Africa CEO Forum for our investee company, Arise, and Oil and Gas Deal of the Year Award from the IJ Global Awards in respect of the Cabinda Oil Refinery project. Sovereign, Supra, and Agency Treasury and Funding Team of the Year at the 2024 Bonds, Loans, and ESG Capital Markets Africa Awards. Notwithstanding these accolades, our continent's infrastructure deficit remains larger than ever, requiring even more pragmatic solutions to attract investments to address the billions of dollars of financing gap annually. Constrained government resources exacerbate this challenge, while the continuous outflow of our own domestic investments to foreign clients only adds to the complexity. The available capital within Africa must be harnessed to work for Africa. Pension funds, government reserves, and personal savings must find avenues to invest profitably in the real African economy. We must channel the increasing number of indigenous public and private sector institutional investors with significant resources expressing interest in Africa in infrastructure investment. Hence, our theme for this year's symposium, which we heard earlier on, which is retaining Africa's capital for sustainable growth. This symposium will shed light on the often overlooked but vital role of pension funds, sovereign wealth funds, insurance companies, and other institutional investors in stemming capital from our continent. With a lineup of vastly experienced speakers and industry experts to impart their knowledge and the lessons they have learned, this symposium promises to be perhaps our most enlightening one yet. In closing, I'd like to assure you that with the right institutional support and collaborative efforts of all our stakeholders, working with institutions like AFC, with a clear Africa-focused mandate, combined with an extensive global network, we can rewrite the African narrative. Our story must be one of African capital working for Africa, developing innovative financial solutions, building ecosystems to support local value addition and job creation, and ensuring the sustainable utilization of our natural resources. Once again, I thank you for your time that you're spending with us, and I wish you a productive morning. Thank you.
Our search to be the solution to Africa's capital needs by providing a reliable institution that Africa's pension funds, Africa's reserves, Africa's sovereign wealth funds can invest in. That process for us will continue because that is the basis of our whole strategy and indeed the foundation of our success, right? And the last year alone is no exception because we attracted more pension funds out of Africa to invest in us, more sovereigns from Africa to invest in us. So that kind of brings me to, opening up the conversation on this panel. And essentially, one cannot run away from the fact that as much as we wish to, and we have been successful in deploying domestic capital, there has to be a way of working with global capital. There has to be a way of us understanding what does global capital want? How can we fit into their agenda for our deliverance? If that's one way of kind of putting it. So I'll kind of move on. And as you know, in Africa, we like to be hospitable to our guests. So in our panel today, I have one non-African individual out of the four. So I will come straight to him, Engineer Faisal from Saudi Development Fund, because we obviously want to greet our guests first, if I may. So Faisal, the question I have for you, and if you can give us a brief answer to it, is from a Saudi Development Fund point of view, which is becoming a huge investor in Africa. The Kingdom of Saudi Arabia is moving into large investments in the natural resources sector and related sectors. So from your point of view and Saudi Development Fund's point of view, what is the support and the partnerships that you are seeking to be effective with your investment strategy in Africa? Over to you, Faisal.
Thank you, Gupta, for giving the opportunity. And also, thank you for giving the opportunity to meet with your esteemed guests and audience. This is a very important question, but let me first take it from a geopolitical perspective. As you all know, the relations between the Kingdom of Saudi Arabia and Africa are considered as historical and strategic relations, as it have been for many decades. And there is a desire from both sides to develop them and move them a couple of levels above. So we cannot separate what is happening in the kingdom from Africa and vice versa. There are very coherent political and economic relations between the two sides, as the volume of our trade exchange in the last year only reached $20 billion, in addition to announcing many economic and development initiatives worth billions of dollars. That includes the $5 billion that was announced by His Royal Highness during the Saudi African Summit last November toward the African continent. Now let's return to your question. At SFD, we have launched our strategy, which has an ambitious vision that seeks to make SFD a comprehensive strategic partner that advances the sustainable development of the world's least developed countries. And our mission is to empower a stable economic development of countries in need by leveraging the Kingdom of Saudi Arabia's resources to provide financial, technical, and human support to meet the needs of its partners. So in the African continent, we focus on all sectors to tackle many issues, especially those of common concern. For instance, access to basic needs such as health, education, water and sanitation, migration, food security, youth, and unemployment, and also the most vulnerable, such as women and children. And as an evidence to the importance of the African continent to the kingdom, the first loan approved by the fund was in 1975 to the state of Uganda. And now SFD's support to African continent constitutes about 60% of its development activities around the world, as it has provided support to 47 countries since the beginning of its operations by financing around 470 development projects with a total value of more than 12 billion US dollars. We are not limited to this. We are working and will continue working in the future to harmonize with our partners in the beneficiary countries and donors, whether from the Arab Coordination Group or the international donors, to launch specific and tailored initiatives that work to achieve security, stability, and prosperity for the African continent. Like the most recent initiatives that that were launched by the Arab Coordination Group, which are the initiative for the food security with an amount of 10 billion US dollars. The climate change initiative with an amount of 24 billion US dollars. And the last but not least, the initiative we launched on the sidelines of the Saudi African Summit for an amount of 50 billion US dollars. Finally, allow me to conclude with a quote from His Highness, the Saudi Minister of Foreign Affairs, when he stated, quote, "We want to be a part of the global conversation in a way that ensures everybody has a way for prosperity, even in the regional context. We are taking an approach that is an absolutely key that our immediate neighbors are not just stable, but they are also prosperous. Because if they have growing economies, if they have growing market, that is also an opportunity for us and vice versa. If we are stable, if we are growing, we provide a great market for them." Thank you, Kaptan.
Thank you so much. Those are such powerful words that, it's all about coexistence. And if one is to remain strong, one has to make sure that the markets and the regions and the friends and the partners we have around us also get stronger in the process. So thank you for that, Faisal. That's very, very comforting and encouraging from an African perspective to know that the Kingdom of Saudi Arabia sees Africa as a major strategic investment destination, and the evidence is out there. So maybe it'll allow me, latching on to where you left it, Faisal, to come to Mr. Antonio Pedro, who is the Deputy Executive Secretary of UNECA. And Antonio, the question I would like you to answer is, you heard Faisal talking about the strategy. You heard about an interest of epic proportions from a very large economic power to engage in Africa, and these are important. So where do you see the African response in terms of creating an environment which becomes more and more conducive for such global interest to find easy ways or easier ways of investing in Africa? What's your perspective on this, Antonio?
Thank you very much, Sajid. First, let me thank the AFC for inviting ACA to be part of this important conversation. And let me take cue on what was said earlier. First, that when we, the continent, are the solutions powerhouse for many of the critical transitions that will inform the world of today and tomorrow. And that we have the potential. But potential alone will never allow us to achieve prosperity that all of us aspire. So there are a couple of things that need to be done. And I again, let me take cue of what Mr. Shenoud had said earlier. Things are happening on the continent, but they're not happening at the scale, at the speed that is necessary. So scale matters. We need to increase the project pipelines of bankable projects on the continent. And some of the things that already the AFC is doing is important. It's about de-risking investments on the continent. And that requires investments on a couple of fundamentals. One of them is really to indicate what the opportunity is, where the opportunity is located, and what is the size of the opportunity. So that can be done by providing a freely available database of that information. So country profiling can generate that information, where we will do systematically conducting growth diagnostic studies on all of our 54 countries so that we determine what is their national value proposition. In other words, what is it that differentiates one country from another? And also that can be supported by different steps of analytics, like the GIS-enabled hotspot analysis, so that we ensure that infrastructure investments that you are doing, AFC, with other partners are doing, really leads the opportunities where the opportunities are located, so that we don't have roads to nowhere. I think that is very important. De-risking also is about addressing some of the bottlenecks that we have on the continent, hard and soft. The hard ones you've mentioned, I mean, the need for us to invest in infrastructure. For example, the Economic Commission for Africa have done a study that has indicated that for us to be able to realize the full potential of the African Continental Free Trade Area Agreement, we need about $500 billion of infrastructure, of investments in transport infrastructure, both in terms of air cargo, ports, and otherwise railways. So that is an opportunity that requires an investment. And our African development financial institutions can play a role into de-risking that investment, attracting the wealth and interest from countries like the Kingdom of Saudi Arabia, and that should be part of our investment. We at ECA are conducting and investing in that effort to de-risk investments on the continent at both levels, national, at regional, sub-regional, and at overall continental level, by investing on all of those analytics that we've said. We need to create economies of agglomeration so that scales that we need for us to be able to achieve the transformational change that we need can be realized. This is where, I mean, working on economic corridors, working on special economic zones, working on regional value chains become important. Again, there's certain things that are being done. We are collaborating with the AFC, with Afrexim Bank and others, for example, in developing the batteries and electric vehicle value chain on the. So let me quote, earlier there was a quote, let me quote a very important person, which is Otto Sharma, that has done quite a lot of interesting work on transformational pathways. And he says that the power of attention is the real superpower of our age. Attention aligned with intention can make mountains move. And we need to make our mountains move. We need to move our mountains on the point. And that really is the investment that is required. The detailed attention to what needs to be done, both in terms of the legal and the regulatory frameworks. Let me again, with your permission, go back to the African Continental Free Trade Area Agreement. 1.4 billion, that's the population size of Africa today, is going to be about 2.5 billion by 2050. That's the combined size of China and India today. But for us to be able to realize all of that potential, we need to unite the continent. Currently, it's balkanized, both on the hard side and on the soft side. We've approved in the African Union Summit in February last year the protocols on investment, competition, and intellectual property. For those to be able to allow all the investments to flow on the continent, they need to be domesticated at the country level, meaning that the national laws and regulations need to be aligned with the tenets of those protocols. Because otherwise, everything that makes investment come to the continent will not be realized. So addressing those bottlenecks is absolutely key. There are certain things that are already being done on the continent, which, for example, the AFCFTA Counter Business Index, which is an effort towards us capturing the sentiment of our own investors. Currently, I mean, we are, our credit profiling, our credit rating is done essentially from outside. I think we need to invest more on those fundamentals, spending more time with our own domestic investors to understand what their concerns are, and then factor that into designing and in the rating of the continent. In other words, the same weight and energy that our governments spend into creating an enabling environment for foreign direct investment needs to be equally spent into creating an enabling environment for domestic investors. So that's the platform, that's the infrastructure, which I believe is important for us to be able to make sure that indeed Africa becomes that global competitive investment destination, in line with some of the declarations that were made in Nairobi during the African Climate Summit, where, I mean, we indeed position the continent as the powerhouse for climate solutions and investments. And talking of investments, just to close this introductory remarks, I mean, these are, and that's again going back to the conversation about the potential, is, I mean, from our own non-renewable and renewable assets. I mean, our solar irradiation potential is about 60% of the global solar potential. We can invest in those areas. And by that, we will make our industrialization process and agenda much greener, enabling us to be able to be global competitive, entering in the markets where are now imposing carbon adjustment measures. So these are part of the potential. You made earlier reference to our critical minerals. 70% of cobalt is produced in DRC alone. Manganese in South Africa and in Gabon, meaning we can be the hub for localization of the batteries electric vehicle value chain, a value chain that will reach a value of about $46 trillion by 2050, again, on the strength of the expansion of the deployment of electric vehicles. Let me stop here, and then I'll come back later to some of those. And indeed, this conversation about industrialization, I'd like to say that industrialization is not the business of the ministers of industry alone. It requires a whole of government approach, and it requires conversation and types of collaboration that involves private sector, financiers like yours, and other interested parties, so that indeed we can move from potential to real transformational gains and welfare gains on the continent. Thank you.
Thank you. Yes, thank you, Mr. Pedro. Very well said. I think there are 3 points that come out very strongly from what you said. The need for unity, the need for harmonization, and the need for collective bargaining, right? Without it, none of these progress that we know we are capable of will happen. And that kind of, is an interesting way to also question how we start harnessing our natural resources, insist on value addition at source, so that creates the industrial base that in turn becomes the customer to infrastructure, because infrastructure needs industry to work in tandem. So if I can then bring in Mr. Cornelius de Poc, the governor of the Bank of Botswana. And Governor, the reason I'm bringing you in now is very simple. Botswana is a shining example on the continent of getting one thing right from day one, and that is how to not only extract its natural resources, but how to successfully negotiate and bargain with a global power, in your case, De Beers, to make sure that processing, marketing, selling of your commodity is done out of Botswana, which creates the economic multipliers that we across Africa want to replicate. So I want you to talk about how did you do it and what's in store for us in the next decade from Botswana. Over to you, sir.
Botswana is a peculiar situation. So I'm just going to share with you where we came from. When we got our independence in 1966, we are one of the the three poorest countries in Africa. I think depending on which book you read, our GDP per capita, our GNI per capita was anything between 16 rand and 20 rand. That was our GNI per capita. And we had nothing. The only resources we had was people. And the other thing, economic activity really was backward agrarian systems in agriculture. That's all we had. But we also had a culture, a very strong culture of in the chiefdoms and tribaldoms in the country. And this culture was principally on the basis of consultation. Now, then from day one, we adopted, because we didn't have anything, we had few resources that we were getting from agriculture and also from donors. We were even financing our recurrent budget, our current expenses. We adopted a development strategy that we called a national development plan. So we've been operating on something called National Development Plan, and we are the first African countries to do so since then, since independence. And if that was meant to put constraints on allocating the resources, the few resources that we had, and prioritizing and bringing accountability culture in the government. So that's what we did. Of course, like you said, then we, in the 70s, in 1975, well, in 1972, we then, for the first time, not that we didn't have minerals. When at independence, all our gold had been extracted and shipped to Europe by the colonialists. So we didn't have anything. The gold was gone. So we didn't have any mineral until 1975, when we discovered copper nickel. So we started the business of mineral production, and then of course, whilst we were doing that, we discovered in the early 70s also diamonds, as you know them. In 1981, we discovered a mine here called Joanne Mine, which is the dollar per carat, is the most valuable mine in diamond mine in the world. We also discovered another mine at a place called Orapa, which was the biggest mine by physicality. So revenues coming out of this we went into partnership with DBS, as you have mentioned, and partnerships as to how to produce these diamonds, how to market them, and how to sell them and how to market them. So in the early days, really, it was about selling raw materials to wherever they were going. So the development strategy that I mentioned then came to call to say that we ought to agree as a country how we are going to be using the resources or the revenue coming out of the diamond trade, because that was the principal revenue source. And I agreed that everybody agreed in the country, because we have a very established, embedded system of consultation. And we had put up institutions, both financial and legal institutions, government institutions, public institutions. So on the dividends and royalties we're getting from this mining, they were put into certain funds, which were managed by the central bank, because the central bank had just been formed in 1976. So in this country, the rules are such that nobody, no politician, no civil servant can touch the money, because the institutions and the rules of the game have been ring-fenced that nobody touches money. It's paperwork or computer work nowadays. We are trustees. We are working as trustees in government and the public entities. So that's how our culture came about, and we avoided the resource curse or even the Dutch disease through, like I said, institutional arrangement, political landscape, and other policies. I can talk the whole day on this issue. So I'll just stop. I'll pause here for a while.
Thank you, Governor, because you have, I think, left us with some excellent thoughts to kind of consider as we look at the African development story. One is how to harness the resources, but also how to successfully industrialize your country by adding value to those resources. And simultaneously, as you said, building institutions to protect that wealth so that that wealth is managed for the longer term future of the country, as opposed to supporting shorter term fiscal deficits. So Botswana has provided a live example, a living, talking, walking example, as I would like to call it, of how resource utilization can create a strong economy that creates prosperity for all. So thank you for that, Governor. That allows me then to move quickly, and we are running a bit out of time. We have two more panelists. I would like to move on to Mr. Alain Mekulu, who is the CEO of the pension fund in Cameroon and a recent investor in AFC. And I would like to ask you, Alain, what was the thinking that allowed you to consider investing in an institution like AFC? Was it an asset diversification issue, or was it also a way of partnering an institution that would in turn allow you to develop your infrastructure and industrial base more effectively in your own country? What kind of dominated your decision? Was it investment or was it a strategic partnership? Over to you, Alan.
Thank you very much. I'm very pleased to take part in this panel, in this discussion, which is very interesting. I would very quickly say that as far as our investment is in AFC is concerned, it's obviously an investment to try to have more return on what we do, but also I would even say mostly an African investment, because we believe very strongly that we need in Africa, in order to retain our capital, we need absolutely to join our means, because we are so small, individually taken, we are very small, and we cannot really impact very significantly in our development if everyone goes on its own path. We need to join our means. And that's the reason why we chose AFC, because it's one of the most valuable vehicles in our continent, which utilizes and uses our money very efficiently. And we even need, I would say, to increase that part, because we need to have a very, very powerful instrument, very powerful vehicles like AFC. AFC could not even be the only one. We have Africa 50, we have ABD, but we need more. And each of these vehicles should be very powerful. And our paradigm is simple. First of all, as I said, putting things together, putting means together, even putting projects together. And secondly, create value in Africa. We should not only rely on putting means together or investing, but we need to be sure that these investments are creating more and more value to our continent. Because as you know all, you can invest, but not creating corresponding value. So we need to invest on infrastructure, for example, and other manufacturers in our continent in order to create value. But most of all, I would say that we need to try to imagine and include culture in our own investment, because we just try these days to copy, to do as the others in their own rules, capitalism rules. That's good, fine. But we see that it's not always efficient because we are not systematically including our cultural values in our investment. By so doing, I believe very strongly that we can go most rapidly forward, including, insist on that aspect, including culture in our choice of investment, in our implementation of investment, and in our ways to work together. If we can elaborate more in other occasions on this aspect, which I think could be very important in order to enhance the retaining of capital in Africa. Why not? We should, I think, beside of encouraging joint infrastructures in Africa, even bring Africa businessmen to work, to draw projects with us, and try to put it on the place, to put it practically, to try to settle it up, not just waiting the projects, but encouraging that project by, for example, proposing investment projects in our continent. By so doing, we can help more in growing, settling up these investment, the retaining of the capital in our own continent. Okay, I will stop by this way, but if needed more explanation, I could go forward. Thank you very much.
Mr. Megalu, I can't thank you enough, not only because you have served as an example for how African pension funds should look for diversification and support local African institutions, but also because you brought up a very, very important point. And that is, domestic capital is important, yes, because capital is important. But why domestic capital is important is because domestic capital comes with a greater level of consciousness, a greater level of conscience, a greater level of cultural empathy. It brings in the nuances that makes capital work better. So that point that you made is a fantastic point, which I wanted the viewers and the listeners to basically hear again, which is why I repeated your golden words, sir. Thank you again for that, because that's a very important aspect of how one invests. Let me now come to Dr. Ibrahim Stevens. My apologies, Dr. Stevens, for making you wait for so long. Obviously, last but not the least, by any stretch of imagination. As the governor of the Central Bank of Sierra Leone, give us a little context on what you believe, because from our point of view, central bank reserves in Africa constitutes a huge source of capital. And we need to find ways of those reserves to be reinvested or kept back with African institutions which have the credit ratings that you look for. So from your point of view as the governor of the Central Bank of Sierra Leone, how do you see reserves playing a role in this whole global capital versus availability of domestic capital conversation? Over to you, Dr. Stevens.
Well, thank you very much. I'm delighted to be here. I think Sierra Leone became a member of AFC in 2008, if I'm not mistaken, and perhaps one of the founding members of the AFC. I think you hit a very critical question about reserve management. Traditionally, small developing countries like ours are on an IMF program, and therefore we have a critical reserve threshold that we need to maintain. Normally three months of import cover. So the stuff that you have left over to play with, depending on your size, can be deployed into very good uses. However, before I discuss the potentiality or how potentially we could use these reserves, you need to understand also that as central banks under an IMF program, we are particularly conservative to be primarily occupied with preserving asset value. So our reserves are held in very safe and secure locations, and we don't normally we do not go into sort of general investment space. But I can give you a good example of how, when it became necessary, we've deployed our reserves to address critical national issues, which in many aspects demonstrates the potential use of reserves in these circumstances. A good example is during COVID. The international financial system was at a crossroad. Things were very challenging. Supply chains were very worried about importation of essential items. So the central bank introduced a policy where we made available $50 million of our reserves to support importation of essential items into the country. And this was done at very reasonable interest rates to commercial banks. So importers for rice, fuel, and other essential commodities were able to access much needed foreign exchange through from the central bank, but through commercial banks. So with proper credit administration, and we're able to, from what we see from the counterfactual we have, we're able to manage to weather the impact of the shock such that there was hardly any crisis in terms of the availability of our staple food, which is rice, in Sierra Leone over the immediate period when we were at the height of the crisis. Another good example is we've also introduced an agricultural credit facility, not on the scale of what our countries, bigger countries like Nigeria did, but we've done something similar through the commercial banks again to support the production and importation of seedlings and other agricultural related items to try to support that sector so that we will reduce the level of importation of rice, for example. And this import substitution plays a major role in addressing our inflation problem, because naturally, if you grow more of what you eat, you are able to drive the price down, and generally price level will go down. So these are two examples I can give you. Now, from a general standpoint, if you have a good buffer, of course, you must consider holding your reserves in investments and projects that would potentially give you higher returns compared to what you get when you hold them in big central banks like the Federal Reserve or the Bank of England, or even the Bank for International Settlements, where you place stuff on very safe and liquid assets. So without a doubt, I think to answer your question, there is a potential, but it depends on where you are and the level of reserves you have over and above the minimal threshold that you need to maintain for program and programmatic purposes.
Governor, thank you very, very, very much. On a lighter note, I will ask my treasury guys to get in touch with your office because, as you know, we are a A3 rated institution, so we could certainly qualify to look after some of your reserves, sir. I hope you will entertain them. We've run out of time, generally speaking, so I'll not go into a major summary, but essentially 3 points I'll leave the audience to contemplate. One is that it is not true that Africa does not have its own capital. It does. It may be scarce, but it's there. Secondly, it is not true that those savings are not being deployed into the African real economy. It is increasingly happening. And institutions like Africa Finance Corporation is a living example of how we mobilize domestic savings, use those savings in a prudent way to develop and de-risk projects, which then allows global capital to come in. And the third point I want you to leave you with is global capital will only come when global capital wants to come. And global capital will come when they believe that the temperature is right for them. So it's for us, custodians of domestic capital in Africa. It's for us as custodians of African institutions managing African capital to make that environment conducive for global investors. And for that, we need to work with the leadership. And you heard today the vision of the leadership we have on the continent, the innovation that's happening in the continent today, because for us to grow and survive, we have to be masters of our own destiny. And that's what is happening. And I hope that is what I've managed to convey to all of you through this panel discussion. Back to you, Fifi.
Thanks so much, Sanjeev. A very insightful and excellently moderated panel. So your humility certainly deceived us at the beginning because I don't think anyone could have done a better job than you. I'd like to now move on to the tail end of today's program. It does seem as though time does fly fast when you're having great conversation. And we will be hearing from the other player of the latest shareholder to join the AFC. Of course, Turkey has done that through the Turk Exim Bank. And for a little bit more insights into the reasons for that partnership, we'll be hearing from Ms. Hatice Okmez.
My name is Alice Osanasi, in charge of country relation and equity mobilization at Africa Finance Corporation. And I'm joined today by our dear newest partner, Turk Exim Bank, and I will allow her to introduce herself.
Thank you, Alice. We are very glad to be a part of AFC. I'm Hatice Ürkmez, the Director of Financial Institutions, Buyers Credit and Project Finance Department in Turk Exim Bank, the first non-African shareholder of AFC.
Newest and first.
Newest and first, yes.
On that note, can you please tell us a little bit more about Turk Exim Bank and how it fits in the overall Turkey-Africa strategy?
Turk Exim Bank is the sole official export credit agency of Turkey, mandated to promote and diversify the exports of Turkish goods and services, increase competitiveness of Turkish exporters and contractors, and help them to enter into new markets or increase their market share where they are already present. When it comes to Africa, the continent is one of the Turkey's regions of focus for quite a while. As you might be aware, Turkey launched an African initiative in early 2000s. And as a result of this initiative, both bilateral trade between Turkey and the continent and the operations of contracting companies has increased significantly. I'm proud to say that our very first transaction in sub-Saharan Africa dates back to 2005 with a bridge construction.
2005, first transaction in Sub-Saharan Africa. 18 years later, first equity transaction in Africa in a multilateral financial institution, and not just in Africa, but across the globe. Why AFC? What motivated the Turkey Exim Bank to take this step forward on behalf of the government of Turkey?
First of all, to reason simply, investing in AFC will catalyze sustainable economic growth and development within both regions. A collaboration that signifies a profound commitment to strengthen synergies between Turkey and Africa, and that aligns with Turkey's strategic vision of fostering resilient and sustainable growth in the continent. Our motivation in the cooperation lies under the unique expertise of AFC. AFC is one of the multilateral institutions combining specialist industry expertise with a focus on financial and technical advisory, project structuring, project development, and risk capital to address Africa's infrastructure development needs and drive sustainable economic growth.
Now your family on board, you have visited Lagos. What's the next steps of this partnership, and how does it really align with Africa overall development priorities in conjunction with the Turkey-Africa strategy?
As we formally join AFC as a shareholder, the next stage of our partnership will focus on working together with AFC to support a prosperous Africa in alignment with the vision of Turkey's government's Africa Partnership Policy. Specifically, we will focus on two main areas: co-investment opportunities and knowledge transfer and capacity building. In terms of co-investment opportunities, we are committed to establishing a dedicated project finance window to enhance our engagements with AFC. And for the second part, we are also looking to foster the exchange of knowledge through annual joint webinars or summits with Turkish contractors and exporters that will expand cooperation between Turkish and Africa stakeholders.
Thank you, Hatice, for your time and consideration.
Alice, thank you again. It's an honor to be here. Thank you very much.
Helping us come and bring to a close the 4th edition of the Africa Finance Corporation Country and Stakeholder Symposium. I trust that you have enjoyed it, and I trust that you have found it insightful, and I trust that you are looking forward to the 5th one. With that said, I wish you all a great day further from myself and the team over here. It's goodbye.